Now, what is the meaning of IMF? IMF stands for International Monetary Fund. It's an international financial institution which is established to promote the monetary cooperation, financial stability, and facilitate international trade, indirectly helping for higher employment, sustainable economic growth, and reduce the poverty in the world. So, the major objective of International Monetary Fund to work as a supporting body, supporting organization, so that the growth or issues in international trade are being settled down and the people are enjoying the cooperative movements about the same. So the most greater advantage of international monetary fund is to help the developing nations and developed nations to find themselves as a military where they are able to understand help for monetary promotions and the socio-economic reforms at a global level. The idea behind International Monetary Fund was to work and central place where the financial issues, financial subordination, and promoting the global monetary cooperation, indirectly leading the way to trade more effectively in international market. The headquarters of International Monetary Fund is located in Washington, D.C., and the date of actual establishment is 27th December 1945. There are total 190 members. That means total 190 countries are being member of International Monetary Fund. The current director who is managing International Fund is Christina Georgieva, and these directors are elected out of the all member countries. Normally, the finance ministers are member of this International Monetary Fund, and 3 years they elect the members on rotation basis, and based on this members voting, they decide the president. Let's talk about history. So again, we go back to the Bretton Woods Agreement. In 1944, the Bretton Woods Agreement was conducted, where the 44 nation agrees to create International Monetary Fund. Now, if you remember, I have quoted that India has also contributed towards IMF. The reason is IMF was officially established in 1945, that is 27 December, and it was having 29 members. It has given the first loan in 1947 to France, that to be of 250 millions. In 1971, the collapse of Bretton Woods Agreement shifted the interest towards floating rate, and the amendments were carried out in members in 1978. During 1997-98, Asian financial crisis were outburst. The first time in this Asian financial crisis, the International Monetary Fund has given the large bailout package. Then 2008-9, In global financial crisis, the IMF has extended the lending and survivals. Similarly, in 2020-21, the COVID effects, the IMF has played a very vital and important role. So this way, the journey of IMF started. Actually, it has started on 27 December 2045, and we got independence in 1945. So 1946, when we start the planning our economy, we have taken a key decision to become the member of this monetary fund. Just go through the slide. I'll wait for a few seconds because this is a crucial information. In examination, if the working note is asked about IMF, you can use this information for your writing part because in any books you will not find the this detailing about International Monetary Fund. So let's now move on. The Bretton Woods Conference is a basic foundation of International Monetary Fund. In July 1944, Mount Washington Hotel, Bretton Woods, New Hampshire, USA, the meeting was held by different delegates of 44 allied nations. So the total 730 delegates take the part. This meeting was led by John Maynard Keynes and Harry Dexter White. These both are well-known economists. So they advocate that why don't we have a pool of money and the fund which will be supporting for international trade. After First World War, the Germans were suffered a setback and they were in need of money. But due to the bans and impositions in First World War, the retaliation was happened and effected in Second World War. So understanding the history, what has repeated in First World War, they all agreed that we'll create some fund, some reserves, some method of some channel where each nation will get an opportunity to get the funds and arrange for reconstruction or redevelopment of that nation. The base purpose of International Monetary Fund was to help the member countries and other countries which has suffered a lot during the World War II because in First World War it was restricted to the 17 countries, but the Second World War, where with German, the Japanese has procured the advancement. The entire world has suffered a lot. The boundaries, the nations has emerged. The new colonies has stopped working, and British, Dutch, and other people like French, British, and Dutch, they have given up the colony system. And this give up of colony system has emerged of very large number of nations. This emerging large number of nations are mostly poor and underdeveloped countries. These poor and underdeveloped countries were in need of some financial aid so that they can survive. Because of the gap between rich and poor, the migration was shifted from underdeveloped to developed nations, and it has created an economic chaos. So, these two great people, John Keynes and Harry Dexter White, they advocate to create the International Monetary Fund and World Bank so that the fixed exchange rate system is pegged to US dollar and gold, and based on this, the transactions or turnovers can be happen. So, considering this with the basic purpose to rebuild the international monetary system after World War II and to avoid the economic divisions or issues, they all have agreed to build International Monetary Fund. So on 22nd July 1944, the journey of International Monetary Fund began, where they start collecting the contributions, opinion, and the funds to establish International Monetary Fund. The International Monetary Fund has started working on 1st March 1947 because we got freedom in 1946 and it started working in 1947. We are one of the key members of International Monetary Fund. The this is an building of International Monetary Fund. It is having two complexes, HQ1 as a main building and HQ2 as a complex. It has established this current building in 1973. There are approximately 2,700 employees across the 150 plus countries are working as the human resource of International Monetary Fund. The key facilities offered in this headquarters are boardrooms, meeting rooms, executive boardrooms, and a library which has access of multi-domain and variety of books which are referred for study regarding international trade and international movement of money. The International Monetary Fund maintains the regional office in Paris, Tokyo, Africa, Asia, and Europe. So their headquarters is in Washington DC, but their regional offices are spread across the total 9 locations. I'll wait few seconds. Please go through this contents. You can take a screenshot if you're interested, because this you can use to write a note on International Monetary Fund. Let's move on. There are 4 phases how the International Monetary Fund has emerged. The first phase was actually started from 1944 when the Bretton Woods Agreement was signed, but we consider first phase from 1945 to 1971 when the first time instead of gold standard, the peg system of gold is considered, and the purpose of International Monetary Fund in first phase is to maintain the stability by short-term lendings. So in first phase, the basic reason of International Monetary Fund was to support the evolution, support the purpose of peg system, because in 1970 to 1973, the conversion was highlighted as floating, but before that, they was using the peg system where US exchange rate was, sorry, US dollar has a dominance for convergence, and due to which we already see the US economy has got the setback. Then in second phase from 1971 to 1980s, the role of International Monetary Fund is to ensure the floating exchange rate and shifted its focus from surveillance and advice policy. So the first phase, the International Monetary Fund was about short-term lending. The second phase, they were talking about surveillance and policy advice. Now, why they shifted focus? Because after 1973, when the higher inflation was there, the John Kennedy, the chief of US, he has said that henceforth you cannot expect that gold standard to be only followed by US. And most of the countries which got the freedom, they agreed to have floating exchange rates. So no more dollar was required as medium of exchange or measure the value of exchange. And hence, in this case, these countries are shifted to a floating. We already seen in Bretton Woods Agreement that in 1973, due to the gold standard, the prices in US was too high. The inflation was created, and that inflation has led to the effect that the US was suffering a first time US economy was having a negative budget. And hence, in the post Bretton Woods phase, instead of just helping for lending rates, which they done in the initial period, they shifted towards surveillance and policy advice. In third phase, that is from 1980s to 1990s, now this was a crucial phase when actually industrialization was in grade one. Industrialization has started in 1883, but from 1990 onwards, the major structural changes has done. But from 1980s to 1990s, most on global level, reformation of the production and supply lanes was happened. And these refinements were supported by International Monetary Fund by giving the funds for development and transition of economies. Now, here, transition of economics means making funds available for shifting to modern machinery, for ancillaries, for supplementary products, and shifting the focus from agriculture to an industry. The fourth phase, we have a modern era from 2000 onwards, where they are assisting for economic crisis, capacity building, poverty reduction, and climate finance and digital currency. So they have shifted their focus from first surveillance, then development and transition, and now they are talking about crisis, capacity building, climate finance, and now most important, digital currency guidance. Just go through the phases. I'll take a pause of 1 minute. If any doubt, you can post in chat box. I guess no doubts. So let's move on. The objectives of International Monetary Fund. There are different articles, and these articles are the blocks. These blocks are defined as per the operations of International Monetary Fund, and the functional or the scope of International Monetary Fund is defined by these objectives. The first objective of International Monetary Fund is to promote the cooperation in international monetary. So they are working as cooperation by way of consultation, and collaboration. So they are facilitating the consultation, the advice, the plan, the proposal, and help to focus on member countries and allied countries so that the economic monetary cooperation is enjoyed on global level. So their interest was instead of depending on gold, instead of depending on US dollars, the market demand forces let them be active to decide what will be the exchange rates. Their focus was to understand the floating rates instead of paid currency, dollar currency, or gold standards. The second thing they was the major need and highlight for expansion and balance of international trade. When the Second World War was finished in 1944, there was emergence of various countries. They were underdeveloped. There were lack of resources. Widespread of poverty was there. So socioeconomic disturbances and economical imbalance was witnessed in that period. And hence, due to the economic imbalances, what is being witnessed during this period, what we have seen, the gap between developed and developing nations has reached to the new heights, and which is not in the interest of smooth expansion and growth of international trade. And hence, International Monetary Fund is effected to play an role of facilitator or guider for expansion and balanced growth of international trade. The third most important, they was decided, but actually this is not achieved. They had decided to bring the stability in exchange rates and avoid the competitive devaluations. So they was more keen here is avoid the competitive devaluations and deal with exchange rate. So the world economies has faced the severe gold standard, semi-gold standard, Bretton Woods, then floating, and so on. But the stability was a greater concern. So Interest Monetary Fund, by contributing funding, refunding, consultation, and advice, aim to provide exchange rate stability. Similarly, because the hub of more than 190 members, it has majority of world economies as its members. It tried to mediate, it tried to avoid the competitive devaluation. Devaluation means the making companies such a way that currencies are reducing, the exchange rates are reduced purposefully to make the product cheaper, make the particular competition competitive. So they are checking with the exchange rates and motivating and guiding to avoid the competitive devaluation. The fourth objective of International Monetary Fund was to create an system of payments for current transactions. So this was the crucial thing they had done, that is multilateral system for current transactions. So this was the one of the best highlighted objective of International Monetary Fund. They aim that whatever the happening on global level, whatever the issues, pros and cons, the conservatively we should observe that the trade disputes and settlements are smooth and they are functioning normally. If any disputes among the nations or trade cycles or the trade issues, they can be solved with the help of International Monetary Fund. Recently, The current transactions issues we have witnessed for member countries where they're not having dollar as resource. The International Monetary Fund first time has come up with the idea that you can take the dollar loans, but you can repay in your own currency. So the basic role of International Monetary Fund is promotion of international trade and assisting the projects by contributing directly or indirectly towards fundraising. Since this become a benchmark, since this becomes a guideline tools and getting support in money, they help to create the confidence in the minds of members of International Monetary Fund, and they are lenders of last resort for funds finance arrangements. They ensure that whatever the activities, rules, responsibilities, and achievements are not being compromised. The socioeconomic orientation of international trade is managed and followed. The last Article 1 of IMF says the shorter the duration and isn't the degree of disequilibrium between international trade. So even the International Monetary Fund, when it was established in 1945 till 1978, or they witnessed the Great Depression of 1930s before before IMF, or they have witnessed the major Asian crisis in 1990s. They are the key players who has seen the disequilibrium, and then they have started the efforts to avoid the disequilibrium because this is a chain of actions. If one chain has weakened, then that will affect on other, and the sequentially that will come to the recession, depression, and deflation stage, which is never being deprived or welcomed by any of its member countries, and hence they are the one who want to consult, collaborate, avoid competition, provide the multilateral system of payments, and ensure the smooth functioning by no disequilibrium and confidence in member countries. I'll wait for a few seconds. Please read the objectives. If anything is not clear, you can put in chat box. I'll repeat again. I think it is clear. So there is no doubt in chat box. So let's move on. Now, this is most important and interesting part of International Monetary Fund. Who are the members and what is the quota system? Before introduction, I want you all to go through this slide so that I'm more clear when I explain it. So please read about majorly quota and membership. I can explain the quota formula later. So let's continue. The Interest Monetary Fund has currently having 190 members as of in 2024. The any country can apply for membership of International Monetary Fund if they agree to the Article 1. What is Article 1? Article 1 is all the objectives which we are just discussed. A member must provide economic data and consultation with International Monetary Fund. policies. Now, the famous quota system, the quota system is nothing but the percentage of loans or the facilities available. In quota system, the member countries were assigned certain percentage out of available funds that they can utilize for their loan, refinancing, or any other activities. For example, if US has a 50% quota, then while taking the loans, the out of total lending amount, the 50% amount US can claim. The quota was on three levels: financial contribution, voting power, and access to finance. Each member country was given a formula that they should consider the GDP as 50% weightage, economic operations at 30%, economic variability as 15%, and international reserve as 5%. So they has considered this as a formula, and based on this formula, they has created the quota for different member countries. This quota ensures the funds are available to that country on priority if the quota is not utilized. Let me explain this. Suppose the IMF is having 100 rupees, the 100 rupees are available. Now, if the quota of US is 17.4 and that to be China is 6.4. So, in this case, out of this, the priority of 17 rupees is given to US, 6 rupees is given to China, 6 rupees it is to Germany, then it is 7 rupees to Japan. So, if the total lending is calculated or analyzed, then in that case, the quota system leads the paceway. For example, if you just go for any train or any bus and your reservation of seats, whatever reservation, even though you are there or not there, their first priority is for yourself. Suppose I do the reservation of 10 seats, but unfortunately, my nine friends do not come for trip. Though in this case, even I have not been in train, at least for three stations, my reservation of 10 people is valid. It is although a different matter that later on the TC can adjust my reservation, but till date, I am boarding on the train. My reservation is there. A similar case happened about this quota. If suppose US has 17.4% quota, then he is having first priority to get the loans up to 17.4%, Japan 6.5%, and China 6.4%. These rates or this quota is prefixed by every 2 years after asserting the gross domestic productivity, economic openness. Now, economic openness means how many sectors of that nation's industry they are allowing the contribution and the entry of multinational companies. They are deregulating the policies where more freedom, more easiness is approachable to multiple nation countries. They lastly has 5% 5% quota for international reserves, and this way they will do the priority ranking and assign the lending capacity to its member countries. So the highest quota is available with US, and the second highest with Japan, following as 6.5%, whereas the Germany 5.6 and UK and France followed as 4.2% of total lending. Let's move on. Let's understand the format and organizational structure. They have the board of governors, and the board of governors are the highest decision-making body. One governor per member country is allowed. Then the nominated person from each country is generally a finance minister or governor of their central bank. They never allow the prime minister, the commerce minister as a member. Normally, the finance minister or the governor of their central bank can become board of governor. Now, what is the role of board of governor? The role of board of governor is to guide, suggest, and instruct the functionality of international monetary fund, continuously work out on approaching financing refinancing activities, consideration and supervision of funds available and allocated, and help for key strategic decision about consultation and rebuilding in any economical any economical crisis across the globe. Then after governance, we have 24 executive board of directors, and this board of directors has different roles. Total, there are about 49 departments or sectors where the International Monetary Fund works, and they are classified into these 24 executive directors. Each director is holding two type of member countries, and they are responsible for account making, recording, publishing, and making the comments on behalf of International Monetary Fund. Then we have International Monetary and Financial Committees. So 24 members are advised on global and monetary system. These committees are assisting the managing directors to perform their tasks by way of the guidance, by way of data management, and by way of understanding the current status and creditworthiness of the member countries. Approximately in 9 different locations, and now in 150 countries, there are around 2,700 professionals who are working as a staff in different committees in supporting the executive board, managing directors, and board of governors to perform their tasks. The voting right is based on quota, and because the voting is based on quota, you may have seen, even though many efforts, the Pakistan is getting the highest loans. Why? Because the 17% quota of US, 6% quota of China, they are contributing towards the more weightage and more growth of Pakistan. And what Pakistan do, we all are fortunate to understand. I'll wait for a few seconds. Please go through this format of organization structure. Any doubts? I guess no doubts. So let's move on. Yes. In 70% of your international finance questions, you get the question, what is special drawing rights? What is its advantage, limitation, scope, and mechanism? So let's discuss the meaning of concept special drawing rights. So special drawing rights indicates the drawings in accounts. Drawings means withdrawing out of the company. When the member countries withdraw the money as a loan, which may be a short term or long term, it is called as special drawing rights. From 1969, the policy of special drawing rights were started. As per special drawing rights, the member countries are allowed to withdraw the loans from International Monetary Fund in dollar, and they are facilitated to repay in their own currency. The special drawing basket is created, and out of this basket, the member countries can claim their requirements. For example, if I'm trading with UK and I require some pounds, then I can approach to IMF, and out of the quota available to India, they can take the loan and they can complete their financial obligations. After the period of withdrawal is over, India has two choices. Either they can return the British pounds or they can return the loan in Indian domestic currency. And this way, it becomes special because the repayment is allowed in different denominations, as well as revaluation and repropositions of the norms is available under IMF adjustments. The word special denotes that if the member is having a requirement of funds, they can withdraw, they can apply or use their withdrawal right so that the economic instability is removed and member countries can take these short-term borrowings for promotion of international trade and maintaining harmony and peace in international financial systems. The special drawing right is allocated based on proportion to the International Monetary Fund quota. In case of special drawing rights, the largest allocation is 850 billion in COVID-19. The special drawing interest rate is determined on weekly basis and it is depend on the basket of currencies. The predominance of the basket is normally by US dollar and euro. So most of the time, the exchange rate prevailing in US economy is succeeded as affecting exchange rates under special drawing rights. I'll wait for a few seconds. Please read the slide. Any doubts in special drawing rights? Please remember these key points because these are going to be asked definitely in examination about special drawing rights. Let's move on. How IMF give the loans to its member countries. A member country facing the issues in balance of payment can request the IMF's intervention. This intervention can be a consultancy, can be a guidance, and can be directly refinancing the activities of trade. The International Monetary Fund is quarterly issues the fund in tranches. Now, tranches is nothing but installments. Like we take a home loan, then when we take any home loan, suppose if the value of home loan is 5 crores, then bank does not provide you the 5 crores at one time. How this progress of your construction happens? As per the progress of work, they will release the installment. And similar way, when we take the loans or we done the lending facility from International Monetary Fund, it is done by installment that is called tranches. The quotas and subscriptions of member countries are the main pool of construction. Now, suppose 16% is quota of US, then US can extend their special drawing rights up to 16% of total lending rates. Why? Because the quota is determined by the contribution in International Monetary Fund. If my quota is 5% and my lendings are required by more, I can take the help of other member countries and use their contribution for my own benefit's sake. Bilateral borrowing agreements and its third line of defense, as in bilateral agreements, the arrangements by member countries is absolutely available and it reduces the burden on lending facilities and evaluation in International Monetary Fund. The loans which are given are need to be repaid on average 3 to 5 years, and in concessional they are extended up to a period of 10 years. The, the interest rate charge, the interest rate charge is calculated and estimated in dollars, and it is always evaluated periodically after 7 days. Sorry, after 7 cycle of months, and the revision of interest rate is based on the percentage of outstanding and the quota section available. The IMF prefers as a creditor, and it always being part of development actions by contributing towards capital, by refinancing, and by helping member countries to rebuild the infrastructure and other facilities and generate the revenue to repay the lendings. So, in short, we can say that International Monetary Fund is basically financing the world development by providing money supply and guiding the consultation and advices about different operations and different roles. Please read the slide. I'll wait a few seconds. You can ask the doubts. So if you see the rights and mechanism of lending, in short, they work as backbone of international trade, where their major interest to ensure the smooth functioning of trade and promote more and more bilateral and multilateral agreements so that the cooperativeness and the collectiveness of working is achieved in international financial system. If in doubt, you can just post in chat box. I'll wait few seconds. Let's continue. I hope there is no doubt. Now, what are types of loans which are given by International Monetary Fund? The two types are there. That is concessional loans and non-concessional loans. The concessional loans are specifically given for longer duration, whereas the non-concessional loans are given for shorter durations. The first loan under non-concessional is standby arrangements. Now, standby arrangements is a short-term obligation to honor the balance of payment in short crisis. For example, India was required dollars to pay for energy resources, and unfortunately, the reserves are not so good. We have accumulated reserves, then we can approach the International Monetary Fund and make a temporary arrangements to meet my current obligations. The second non-concessional lending is the extended fund facility, where around 3 to 4 years IMF can provide for construction, reconstruction, and repairs to different physical facilities so that the member countries can take advancement in their development. The third type of loan provided by International Monetary Fund is flexible credit line, where they provide unconditional support and the bank guarantee for the member countries in various domains. The next type of loans is liquidity line, where to honor the operating cycle of the particular nation or to promote the socio-economic welfare by not disturbing the working capital requirements of nation, they provide the liquidity support so that the member countries' industrial functionality and international trade operations went in smooth and effective way. The last in concessional lending, non-concessional lending, sorry, is rapid financing instrument where the quick disbursement on urgent needs is allowed. So we can approach, sorry, the countries can approach to International Monetary Fund and they can take the benefit of their quota and take quick disbursement for their need. Now, rapid financing and standby agreement, the difference is in standby agreement, the crucial part requires 9 days, whereas in rapid financing instrument, the average period is 3 working days. So the non-concessional lending is normally 2 to 3 years period, whereas the concessional lending facility is not about interest rate concession. It's all about the concession which we give in duration. Instead of 3 years, we are shifting to more period so that the repayment cycle is delayed and burden of EMI is avoided. The first loan in concessional is extended credit facility. So this is a medium support. Then we have standby credit facility. So in standby credit facility, in standby facility, the loans are issued or given to the member countries to make sure that in any financial crisis, the need or the benefit is achieved. Then rapid credit facility is short-term lending for the purpose of immediate cash requirements. The acceptable limits or percentage for member quotas are revised annually, and based on this, the percentage of concessional and non-concessional loans are decided. Just go through the slide. I'll wait few seconds. If in doubt, you can post in chat box. Let's move on. I guess no doubt. It's 9 o'clock. still want to go with facilities, surveillance, and other functions. So it will take more time. So let's move on.